How to start investing in stocks? I think we should start investing as soon as we can. I wish someone had told me about the stock market when I was in college or even in high school. It's good to have some money sitting in the bank for emergencies, but that money in the bank is losing value due to inflation and the low interest rates. In today's video, I'd like to share with you 5 steps that you can take to start investing in the stock market. Step 1. Ask yourself 2 questions first. How much do I need to start investing in stocks, and how much money should I invest in stocks? The first question is more like the minimum amount of money that you can open an account with a brokerage firm. It's the same as your checking and a savings account. Different banks have different amount of minimum deposit. Most brokerage firms have no minimums to open an account, but you should have enough money to afford 3 things when you start investing. You need to be able to afford a single share of stock. Stocks could range from a fraction of a dollar to thousands of dollars. For example, 1 share of Ford is around $15, and 1 share of Apple is around $127 right now. So it really depends. And some brokerage firms allow you to buy a fraction of a share, which is something very interesting. For example, Amazon is about $3,500 right now a share. So you may buy 1/10 of a share of Amazon for $350, but I'd say being able to afford a share is the minimum amount. In addition, you should diversify your portfolio. So I would say it's better to have at least $300 or at least $200 to open an account. And in the world of stocks, it takes money to make money. So if your account is big, your gain is bigger, and your risk, of course, is higher. Whereas if you only have a couple of $100 in your account, your gain will be much smaller, but your risk is lower. The second question is how much of your personal savings should you allocate to stock market investing? This is very important. Do not invest the money that you don't have or you can't lose, because you can make money and lose money. And most importantly, before you start investing, you should always have an emergency fund. Have that set aside for emergencies. Step 2. Find a brokerage company. A brokerage company is also known as a brokerage firm, or simply brokerage. A brokerage is a company whose business is to act as a broker, a middleman. So this middleman, they connect buyers and the sellers to facilitate a transaction, and as a buyer or a seller, we pay our broker either a flat fee or a percentage of the transaction amount. And of course, brokerage companies come in different types, offering a range of products and services at a range of costs and fees. For example, I'm sure you have heard of Bloomberg before. Last time I checked, they charge around $20,000 to $30,000 a year per seat for their services. And some of the other brokerage companies charge much less than that. Also, there are many discount brokerages. They have instituted zero commission trading, and they get a revenue in other areas. So if you are just getting started, think about, if you want to trade it on a computer or a phone or even both. Here are some of the platforms you can take a look at. We have Interactive Brokers, Fidelity, TD Ameritrade, E-Trade, First Trade, Webull, and Robinhood. They all have their pros and cons, and I will also be doing another video on these platforms in the future. Step 3. Once you have your account ready, your brokerage firm will give you directions on how to put money in your account. You may transfer your money online or at a bank. Once your money is ready in your account, you may start buying stocks. Step 4. Know your stock symbols or stock tickers. Every stock has a symbol. For example, Apple Computer's stock symbol is AAPL and Walt Disney is DIS. So, go to the trading platform search field. Let me show you right now. Okay, so right here, you can see that this is my chart. And right here, this is the search field. And right here, I type in AAPL and enter. It's going to show me Apple's chart. So I can start buying from here. And if I type in DIS, and that would be Disney. All right? And if you are interested in a company's stock, just Google and type the company's name and the stock symbol after that, like Apple stock symbol or Ford stock ticker. If I'm looking for Amazon's ticker, just type in Amazon ticker, enter, and you can see right here, AMZN, that is your ticker for Amazon. And this is NASDAQ, but the ticker is this one. If I'm looking for Microsoft ticker, and it's right here, MSFT, and that is Microsoft ticker. Sometimes it's 3 letters, it could be 2 letters or 1 letter. For example, AT&T ticker, and that's 1 letter. It's just T right here, T, and that's New York Stock Exchange. And if I'm looking for General Motors ticker, and that would be GM, 2 letters. And a Disney ticker, that would be 3 letters, DIS. So search your ticker on Google. Step 5. Learn different types of orders. There are many different types of orders, but for beginners, I think it's good enough to just understand these 2 types of orders first: limit orders and market orders. A limit order is an order to buy or sell a stock with a restriction on the price. For example, let's say the market price of Apple at this moment is $130 and you think it's a little too high, and you predict that it's going down maybe $2 today or the next few days. So you may put a limit order at $128. And if the price falls to $128 or even through $128, your order will get triggered and you will get your 1 share of Apple at that price or lower, but most of the time at that price. So if the price is $128.01, your order will still be sitting there and you won't have your share until someone is willing to sell you at $128. And that is limit order. Market orders. A market order is for someone who wants to buy or sell the stock as quickly as possible. So if you place a market order, your order will get triggered immediately at the market price. Market price is the price at that exact moment when a buyer or seller is willing to buy or sell. So to make it easier to understand, if you see Apple is trading at $130, if you place a market order of 1 share, you will get probably from $130 to $131, anywhere in between. Of course, it all depends on the market conditions at the moment and also how volatile the market is. All right, in conclusion, 5 steps to take to get started. Step 1, ask yourself how much money you need to open an account and how much money you want to invest in stocks. Step 2, find a brokerage firm and a platform that suits you. Step 3, transfer your money to your account either online or at a bank. Step 4, find the stock tickers for the companies that you like and study these companies. Step 5, learn different types of orders. The 2 basic orders that you need to know are limit orders and market orders. Okay, that's it for today's video. If you like it, hit the like button and subscribe. This is Grant. Trade and invest responsibly.